So if you ask me what the probabilities are,
yeah,
I'll tell you it's 60% that we end up with a still free but fairer trade.
Fairer.
Fairer.
So we get something positive from
We get positive. There's a 25% chance that this slips into a global trade war.
Bad, 1 in
Bad.
4.
But there's a 15% chance of what I call the Reagan moment for trade.
Now, that would be amazing.
That would be amazing. That would transform the landscape of trade. I think that's what the probabilities were. From day one, the question wasn't whether the U.S. can win a trade war. Of course it can. It is how much damage would we incur in the process of winning this. And I've said from day one that it's just a matter of time until other countries realize that their best approach is to collaborate with the U.S. and fix things that are broken.
I think I don't want to put words in your mouth, but the United States, in sheer size, is in the driver's seat. The other countries need us more than we need them, and we didn't seem to know. We were sort of shy about using our strength and our heft in the past, and as a result, would you say we've been taken advantage of at different?
So a couple of things. I think we are better off for two reasons. Not only because we're big, but we're less reliant on trade in relative terms. So we get hurt less. That's the key issue. When you look at the game theory, when you decide to play a cooperative game uncooperatively, the first question you have to ask is who loses most? Because they will cry uncle first. The second issue is, this was a judgment call. You could either pursue it through existing multilateral institutions, or you can play a completely new game. And there were benefits, costs, and risks. And this was a judgment call from day one. I think there are key issues. You've heard me talk about property rights. There's been a lot of intellectual property theft. There's lots of non-tariff barriers. China hasn't evolved as much as it promised to evolve. And I think this is going to accelerate the process.
Just in your point of those probabilities of how likely the US is to come out on the winning side on that, on the flip side, therefore, are countries like China hurting a lot more at the moment than they are letting on and than perhaps people around the world realize so far?
Yeah, they are. And that's why they've let the currency depreciate by as much as they have. But I think the key issue here is a bigger one, which is divergence. We are seeing divergence growth paths. Very different from 3-6 months ago when everybody fell in love with the synchronized pickup in global growth. No, it's about divergent growth path. It's about a very uncertain outlook, not just for China, but also for Europe and how the US will navigate this. And that's really important for markets. That's why you're seeing a lot more dispersion in asset values.
How much can China soften, though, before the US feels that pain?
So it can soften a bit more. Today, interestingly, and I think it's important to notice, they technically adjusted the way they set the exchange rate to allow for the counter-cyclical factor, which is another way of saying we're going to slow down the depreciation of the currency. And they do that. Whenever they feel that the world is going to react a lot against them weakening the currency, they step back. And we saw them step back overnight through this, quote, technical adjustment.